Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And today we are going to be talking about good news and good news. We've got good news all around, which is fabulous. PPI came in this morning, so that is the Producer Price Index, and it came in actually significantly lower than what we were all expecting to see. Along with this, what this does is that it shows that we've got negative inflation. So we are coming down, and we're coming down fast, and this is great. So with this report, as we've talked about in previous shows, you know, the reports create the drama creates the rates, right? So interest rates move based on reports and anticipation, right? So what is the Fed going to do with this new information? Now, I do have to roll this back, and I do have to apologize for a minute. On last week's show, I kept saying that the Fed was talking today. I knew that it was September 13th, but I counted out the days wrong. So in my brain, my mortgage mom, my mom brain, my perimenopause brain, I thought that today was the 13th, when in reality, next week is the 13th. So I will be reporting, I will be bringing you guys what the decision is from the Fed on Wednesday. I'm like an hour behind the Fed's decision. It gives me enough time to watch the press conference and then give you guys how the market is reacting to the news. So I will be on at 1 o'clock next week with the Fed decision. But with what happened today, with that PPI coming in better than expected, actually significantly lower than what was anticipated, that has thrown everything into a good place. So we were already getting improving prices. 10-year note was coming down accordingly, assuming, you know, that the Fed was going to cut those rates. This PPI report today has kind of basically cemented that Fed decision to cut the rates. At least this is what the experts believe, is that the report today is basically saying, like, how could they not? How could they not cut interest rates at this point? We've had, you know, worse than expected job report. We've had now deflation report as far as the producer price index. So, you know, they're saying, how could they not cut interest rates next week? So with that, we're seeing a lot of positive. 10-year note is coming down, which is great. Stock futures are looking good. And one thing to mention is that mortgage applications are at their highest level that they've been at in the last 3 weeks. So we are starting to see a lot of applications and people applying, which means that we've got more people getting ready to get on the streets, start looking at home buying. We're seeing more people interested in possibly doing a refinance. So when mortgage applications are more abundant, that also plays into that 10-year note. It's where investors might want to put their money. It's looking, you know, more attractive to buy those notes and bonds. And so that in itself will also play into interest rates getting better. So this is all really great news. Now we've got CPI that will be out tomorrow. That is the core price index. If that comes in, you know, better than expected, then that could also, you know, be further cementing that decision for next week for the Fed to cut those rates. If that comes in higher than anticipated, well, that could maybe put a slight pause or maybe a kibosh possibly on whether or not we'll get that rate cut. So tomorrow's going to be another big day with another big report that will be coming out. So, we've talked about this numerous times during my show that the reports are what drive things and what move the investors to either move money into notes and bonds and mortgage-backed securities or not to. But right now, mortgage-backed securities are looking like a really safe bet, and they're starting to look more and more attractive to investors. So this is great news. Now, one thing I do want to caution you on is that we have had 3 straight weeks of improving prices. We had one day with a bad red candle where rates kind of went the other direction. And all of the rest of the days for the last 3 weeks have been holding steady or improving. So we've had green candles and green candles if you watch the candles, for stocks and such. Even Bitcoin will show you those candles if you follow some of those Bitcoin guys. So, one thing to keep in mind is that the improving, that's not really reality. We don't typically see that. We're probably going to see some sidestepping for a little while. We are now down to a report tomorrow. And then from there, everybody holding on and kind of getting their breath, waiting for what takes place on Wednesday. Now, again, we talked about this last week. We're expecting the Fed to cut the rate at this point. Interest rates are improving based on that being one of the news articles. If they don't cut rates, interest rates could get worse, and they could get worse very, very quickly. So if you have been out and about looking at homes, you have a contract, you've been looking at a refinance, you've got an application in, you've been working with your loan officer, you've been waiting to lock in an interest rate, hoping to get the best rate possible, which, by the way, I do not blame you. That is how I work. But you probably should be having a conversation with your loan officer. Do you think that we should lock to grab the gains that we've seen? Do you think we should continue to float and ride this out even further? It is very important to understand that we can very much sidestep for a little while, which means we just don't have movement at all, which is what I would anticipate after tomorrow. I would anticipate that through next Wednesday, that we just kind of hold steady and don't move around a lot. But next Wednesday could be a huge market mover. Now, if they come out and they say we're cutting the rate, that's what everybody's expecting. So it's probably not going to be a big market mover. We could actually see interest rates get slightly worse if maybe they don't cut the rate to the amount that everybody's expecting the rate cut to be. If they cut the rate more than expected, we might see interest rates improve a little bit more from that announcement. But we don't typically, it's not the day of the announcement that is moving the market. It's leading up to the announcement and what is anticipated. So if they do not move the rate at all, we do not get a rate cut, we could very, very quickly see things start to get worse. So again, you want to make sure that you are in touch with your loan officer, you're talking daily, and that you are trying to make the very best decision that works for you as far as should you lock, should you wait, should you write it out. If you have an application that you've started, but you haven't, finished documents, get those in. Loans can't be locked in until applications are complete. So you need to make sure that you get those finished up and completed. So you've got, really, today is Wednesday. Tomorrow's going to be a big market mover, possibly. So if you do have an application in process or you've been thinking about getting one started, tomorrow would be a great day for you to be reaching out to me directly. Going to my website, go to mortgagemomradio.com. You can click on the Contact Us. You can send me an email, Debbie@mortgagemomradio.com. Very, very simple. But reach out to me and talk to me and ask me what happened. And you've got 7 days, guys. You've got 7 days to get in your application to be able to take advantage of where interest rates are right now today, just in case they were to go the wrong direction come next Wednesday. Now, you might be thinking, oh, well, she's just trying to fear monger. She's just trying to get us to do an application and lock in an interest rate. And she's using fear to get us to that point. Guys, I'm not. I have always been very truthful, very honest with you guys. I want to take you back to October of 2024. In October of 2024, we had about a week, maybe 7 days at the very longest, that we were able to actually lock somebody in at interest rates that were below where we are today. So think about that for a minute. And then that went away. We had about a week to week and a half. And since that time, it's been almost a year. It's been 11 months. We have not come back down to those levels again since that time. So yes, the news is great. We're moving in the right direction. We are slowly coming down in the right direction. All of the articles and all of the information that is coming through is positive news. Do I think we're going to continue to get better interest rates over the next 24 months? I absolutely do. I think that many of you are going to have opportunities to do a refinance, to get cash out, to get things consolidated, purchase a home, get into a property, and then you're going to have another opportunity to further lower that interest rate for a better monthly payment. I do believe that that is here and that we're coming into that direction. But how long that it will take if things do spike to come back down to open that opportunity for you again is really a big question mark. There is just no way to know. So this time around, we're almost at the levels that we were in or at in October of 2024, but we're still not quite there yet. I am still not quite quoting the rates that I had the opportunity to lock in October of 2024 as of today. So definitely, if you want to take advantage of something or at least have the opportunity to, you need to make sure that you get your application started, because we need an application. We need an electronic consent from you so that we've got the consent in order to lock that interest rate in if we need to. So you want to get those things started. So please don't hesitate. Go to my website, send me a message, email me directly. It doesn't matter. Call my office, 844-935-3634. That's 844 We Lend for You, WELEND, and the number 4. And then also make sure that you guys do opt in to watch my show live. So next week, again, I'm going to be reporting exactly what was said. What did the Fed say? I will read you guys their statement. I will let you know what I took of the press conference that took place. And we will talk about how the market is reacting to the news that the Fed makes. But again, if you'd like to know what happens tomorrow when we get that CPI report, that core price index report that will come out tomorrow, make sure that you do send me a quick email, touch base. Let's get that application started if you've been on the fence, especially for somebody that's been thinking about doing a refinance. So very, very important. Once again, you guys can call the office, 844-935-3634. You can go to my website, mortgagemomradio.com, and you guys can text me to the same exact phone number. This is a live streaming show, you guys. I always want to see your questions. I want to make sure that I answer them for you. I can see that Grandma Lisa jumps on. So Lisa, so great to see you. Why Not jumped on, says hi, Debbie, and also Why Not. Thank you also for joining. Appreciate it. I don't see any questions coming in today, but today was great news. It just keeps getting better for the last couple of weeks in a row. It's been a very positive, exciting show that I've been able to bring to you. So again, this is kind of like you've got tomorrow, we're going to get one more big report, just to reiterate. And then I anticipate, the mortgage mom, me, I anticipate that we're going to see the 10-year note, bonds, mortgage-backed securities, stock futures. We're going to see everything kind of side crawl. You know, we're not going to see really a lot of up or down. I think we're going to see a pretty dull next 7 days. And then the Fed's going to come out and talk. And that could be a very little market mover and it could be a very big market mover in either direction. So if you have been thinking about doing something, if you've been trying to get a refinance started, this is your 7-day window, guys. This is your, I'm putting you on notice. I'm giving you your warning. Get the application in. We do not have to lock in an interest rate with where it is today. We can wait. We can go day by day by day and make the decision as we go each day, comes along, and try to make the best decision that we can to get you into that, lowest interest rate at all possible. But remember that the last time that we got into interest rates that were slightly below where we are today, it took us 11 months to get there. And as of today, 11 months later, from October of 24, we haven't quite hit those levels again since that time. So hoping we're getting there, hoping we're going to see that come next week, but there's just no way to know. So you got to tune in. Make sure you catch the show next week live as we talk about what the Fed said and we talk about the market reaction. Text the word LIVE, LIVE, to 844-935-3634. Give me a call if you have any questions. Go to the website and put in your contact us form if that's easier for you, or send me an email, Debbie@mortgagemomradio.com. And I do spell Debbie with 2 B's and an IE. So DEBBIE. Grandma Lisa gets on. She says, I will finish watching later. Have to work. Thank you, Debbie. You are very welcome. And I'm going to finish up the show. Nice, quick, and easy show today. Great news, great news, great news. And next week is the, the big money maker. That's going to kind of be the telltale sign. Where are we going from here? So I will see you guys next Wednesday at 1 p.m. right here on YouTube. I hope you guys all have a fabulous rest of your week. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.